How shall I tell you this? Bitcoin is going to do this today. It's going to continue moving with the volatility, entropy, probability, and statistics. What we call the VEPs at Alpha Trading. And the reason it's going to do that is the same reason every other asset does that. Because that's how assets move. If you want a signal, sorry, you're in the wrong place. Can I tell you the probabilities on a low time frame? Sure, even on a high time frame. But I'm not going to tell you, oh, it's only going to go up or only going to go down, or it's going to go exactly to this target or that target because of this triangle or formation or pattern. Because that's not how assets move. Assets don't care about your triangles or chart art or fib lines or any other silly nonsense you use from traditional technical analysis. Assets move according to the VEPs, and that's it. More buy pressure means price go up. More sell pressure means price go down. Buyers exceed sellers, price goes up. If sellers exceed buyers, price go down. That's basic economics 101. And yes, big ETFs are being gobbled up by the very issuers that make them, as well as other large banks and financial institutions. And all of those Bitcoin are being gobbled up as quickly as possible. Guess what? They also know how to hedge their bets. So let's say they're buying 100 Bitcoin today, right? They're also going to have a part of their company that does hedge fund management that's going to counter that trade and hold that position and take the profit on the when the asset makes a move in one direction or the other on futures, right? And then they're going to cash the spread out once it moves. It's called cash and carry. It's an old technique. It's still in use because it works. And if you work on Wall Street, you obviously know what I'm talking about. If you work in finance, you know what I'm talking about. If you're a retail trader, you probably don't have a clue about it, but you really should just spend a minute to Google it and look it up, or just come to our Discord at alphatradinghq.com/Discord and find out for yourself. We'll be happy to explain it to you in great detail. We do this practically every asset. That's what hedge funds do, and that's even what large HFT firms do, and other financial management firms do, that have a team of people or teams of people who manage hedge funds for them internally. Meanwhile, people just keep ignoring the fact that millions and millions of Bitcoin are being bought up by whales. That is, any wallet that has 1,000 or more Bitcoin in it, or any organization or person that has 1,000 or more Bitcoin, right? Whale wallets are only considered to be whale wallets if they have 1,000 or more Bitcoin in them. But guess what? There's also tons of other wallets that have, anywhere from 1 to 999 wallets that aren't considered whales, but that have a lot of money relatively to most people, and they are also buying up as much as they can. Do you know why they're buying up as much as they can? I mean, I can tell you. It should be kind of obvious to you. They're buying as much as they can because they know that right now Bitcoin is considered to be a very low risk investment. It's a very low risk asset, and they want to own as much of it as they can while the prices are still relatively low. And if you're wondering if they're holding it down in order to control that price, the answer is I've just given you the explanation of how they do that. and it works extremely well, as we've seen for the past couple of months. In fact, it's been about 3 months right now. Yeah, 3 months now since the highs, and we see that continuing to be the case. So don't let the peanut gallery make you slip and miss the ride, because basically right now the people who are stacking not just sats but whole bitcoins are going to be the enormous winners in the future as far as they're concerned. That's why they're making these investments, right? BlackRock has more than 300,000 Bitcoin. They have, I think the last report is 308,000 Bitcoin, right, which they purchased for their ETFs. And Fidelity has like 298,000, right? So these ETFs and big financial institutions are gobbling up as much as they can. Right? The largest, just the US-based ETFs have acquired more than 1 million Bitcoin since the ETFs launched in January. More than 1 million. And even companies like MicroStrategy, which itself has more than, the last report in May, end of May I think it was, they have more than 214,000 Bitcoin, which is itself more than 1% of all the Bitcoin in the world that could ever be. And other whales have plenty as well. So the fact is, at this point, the overwhelming majority, if you include just whales with 1,000 or more Bitcoins, they own most of the supply. They own most of the amount that exists. So, if you're wondering what you can do if you don't have a lot of capital compared to these whales, or in general, but you still want some Bitcoin, well, guess what? You can buy tiny little fractions of a Bitcoin. Right? Bitcoin is divisible by 100 million Satoshis. Just like a dollar is divisible by 100 cents, there are 100 million Satoshis in a Bitcoin. And you can buy Satoshis. Right now, you can buy Satoshis for like, I forget the exact number, but around 1,500 Satoshis per dollar. Right? When it started, just 15 years ago, you could get multiple Bitcoins for a single dollar. Right? When the price was basically free, or just the electricity that it cost to mine it. Back in the original days, it was basically nothing to acquire many Bitcoin. And even when it went on the market, there were moments when you could buy a Bitcoin for a penny. Right? That's 100 million Satoshis for a penny. So if you think about it that way, when you look at the returns on this thing, it is going from 100 million Satoshis for a penny to 1,500 Satoshis for a dollar. Now, if you don't think that that's significant, I don't have to tell you, it is the most significant increase in price and returns ever seen on any asset for a period of time. And you can say, well, there was that coin that came out, not that coin, that DeFi product that came out, it cost like hundreds of thousands of dollars, almost $1 million. Okay, but it didn't start at zero. And it also had a very quick rise and a very quick pop and drop. Since then, do you even remember the name of that asset? It was a DeFi product on Uniswap. Tell me if you even remember the name of that asset. The reason you don't is because, like most things in this space, it was a cash grab, and it failed eventually. Of course, the people who were in it originally They knew exactly money, and they did. And everybody else was left holding the bag on a very expensive asset that a lot of people lost a lot of money on because they kept pumping it because they believed the nonsense that it had some kind of magical AI that was able to determine when to buy and sell everything automatically. Well, they weren't running a serious HFT operation, which is why their system failed. Right? HFT firms are run by people. Yes, they do have massive computers with really powerful algorithms that determine when they should buy and they sell, when they should buy and when they should sell, and they use the VEPs to make those decisions. Right? The bots manage hundreds of millions of trades a day for them. They manage literally, more than 1 million trades per second. That's why they control the majority of the trades on any asset in any asset class in any market at any given time. That's why they literally run the markets. And that's why if you want to be consistently profitable as a trader or even as an investor, you should learn a thing about how to use leading information, which is exactly what the VEPS is. It is leading information that helps you know when to buy and when to sell based on the actually highly relevant maths that are, again, volatility, entropy, probabilities, and statistics. Right? Things like the mean of returns, the standard deviation of returns of the mean, right? The returns of investment. Standard deviation of returns is also known as volatility, right? Variance, which is the spread of data around the mean, which is another way of saying volatility. What is that spread of data? It's the ask and bid price around the mean of returns. That is the volatility. It's not the price. Price is moot. All price does, if anything, is follow the returns. Returns only do two things. They move away from the mean of returns, and they mean revert to the mean of returns. Meaning they revert to the mean of returns. That's all the returns do. If you want to learn how to use that information, you can actually learn entirely for free by just joining the Alpha Trading Discord at alphatradinghq.com/discord, and you can get free access to indicators that are built to help you learn and actually trade volatility, probability, and statistics. You'll even get a free chart that's pre-populated with those indicators on them. All you do is go into the Discord of Alpha Trading, go into the request support channel, and ask for free access to the volatility starter pack of indicators. And you'll get that set of indicators. All you need to do is give your TradingView username so that the Alpha Trading team can hook you up with access to those indicators. You get free education, free access to chat with other traders who use these tools day in and day out, free access to the live streams where you can actually participate and not just listen to some Yahoo talk to you on their YouTube channel about whatever ridiculous signals they're shilling, because really all they're shilling are links to their affiliate things, their exchanges that they have deals with, where they get paid every time you make a deposit and every time you trade. And the more you lose, the more they make, because they make more when you lose than when you win. You don't have to believe me. Go sign up for yourself as an affiliate on any of those exchanges, and you'll see, if you have an audience, they will offer you more when your traders lose money than when your traders make money. And you'll still make money when they make money, but you'll make less. Why? Well, because exchanges are not in the business of giving away free money. That's why they offer insane rates of extremely high leverage, because they know users think that that's free money. But all it is a trap to take your money away from you quickly. Leverage is like dynamite. In the wrong hands, it's extremely bad and dangerous. And most people's hands are the wrong hands. Sure, in the right hands, it can be used very effectively. But again, most people do not have those right hands. Why? Because they don't know how to use it. They haven't studied how to use it. They don't even know really what it is. They just think, oh, I can, put $100 bet and I can exit by 100, I times it by 100, and suddenly it's a $10,000 bet. Yeah, and that's how you lose your capital position when the asset moves at 0.5%. Because the trading fees on top of the leverage means you're liquidated when it moves at 0.5%. Or if you happen to take a limit order when it moves 1%. That's if your limit order has 0% trading fees. So anyway, learn how to trade the VEPs. Once again, join the Alpha Trading Discord at alphatradinghq.com/Discord, and we'll be happy to have you learn how to trade the VEPs. We'll be happy to teach you and show you for free. We don't want you to join any affiliate programs. We don't want you to buy any products. We don't care if you never buy our premium indicators. You can if you want, but only once you've demonstrated that you actually know what you're doing with our free tools. If you come in and ask for the Pro Tools, or even for the free trial to the Pro Tools, we will reject your asking. We will tell you no multiple times, because if you don't know what you're doing, there's no point in using the advanced tools. It's like learning to drive a car. Are you going to get in a Lamborghini or other kind of sports car as soon as you start learning, or are you going to first learn to drive a basic car and then step it up once you actually have mastered that? It's the same exact thing. You want to be good at something, you got to learn from the ground up. It takes time, it takes effort, but it's certainly worth it if you're a serious trader. If you're not serious about trading, if you just want to gamble and be a degen, that's fine. Keep doing what you're doing if that's what you enjoy doing. And thank you for being the liquidity on the other side of our trades. And if that isn't a wake-up call to you, I don't really know what is. So hopefully we'll see you in the Alpha Trading Discord. Our live streams start at 9 a.m. Eastern, Monday through Friday. And we cover, obviously, Bitcoin, but also Dixie and SPY and a whole bunch of other assets. And frankly, we'll cover whatever asset you want us to look at, as long as it has a chart that we can look at with history. We'll definitely look at it, and we'll give you our analysis. But hopefully you'll come in and learn, and you'll see other people there who've also learned, and some who are learning right now, and who are making amazing progress. So that's it, and have fun, and happy trading. Cheers.